Buy-sell indicators. We all love them. They tell you when to buy, and you buy. They tell you when to sell, and you sell. Most of the time, these indicators have lots and lots of false signals. But in this video, I'm gonna showcase a buy-sell indicator that is decent even on its own. And then I'm gonna combine it with arguably the best trend indicator I've ever discovered to filter out the false signals and produce a super profitable trading strategy. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, to get started with this indicator, you want to go to TradingView, which is the trading platform that I'm going to be using. If you need to sign up, there's going to be a link in the video description for you to do that. Next, you want to load any trading security that you like in any time frame. For me, I'm going to be using the 5-minute time frame of GBP JPY. And then you want to click on indicators and type in range filter buy and sell. And you want to select this one by this TradingView user. Now, at this point in time, I know you may be thinking, but what exactly is the range filter buy and sell? Well, the magic behind the range filter lies in how it smooths out the price movements. Now, I need you to think of this as a noise canceller for your chart. Instead of showing you every tiny wiggle in price, it waits until the price moves beyond a certain range threshold before signaling a potential trend change. This approach draws inspiration from volatility-based indicators like the QQE, but it then applies the logic directly to price data. Essentially, the indicator identifies a smooth average price range and then uses a multiplier to determine what counts as meaningful price movements. This indicator is made up of the following components. First of all, we have the range filter, this white line, which also changes color to blue depending on the trend of the market. If the market is bullish, the range filter is going to be colored white. As you can see, the candles are also going to have the same color, but if it's a bearish trend, the range filter is going to be colored blue. The same is going to be reflected on the candles. Now, up at the top, we have the high target, and then at the bottom, we have the low target. These are basically the areas that you can use as the trailing stop loss for your entries. The area in between the targets and the range filter is filled with a gray color at the top and a blue color at the bottom. We also have buy and sell labels that indicate when the price breaks outside the range area. The gray area at the top is called the high target range, and then the blue area at the bottom is actually called the low target range. Now, if the price breaks and closes above the high target range, a buy signal is going to be printed. Conversely, if the price breaks under the low target range, a sell signal is going to be printed. Now, let's take a look at the settings of this indicator and see how customizable it can be. Now, here we have the source, and then the length has a default value of 100. If you want the indicator to be more sensitive to price changes, you can lower the sampling period. But if you prefer a longer-term view of the market, you may want to increase this number. Now, the same thing applies to the range. Increasing it widens the range generated by the indicator, as you can see. But then lowering this number is going to make the range narrower and narrower. For me, I'm gonna stick with the default value. Now, the Style tab has several customizable visual options that you can toggle on or off. After you've made your changes, assuming you had any, you may want to click OK. This is a buy-sell indicator, but can also be used to identify the trend of the market. A bullish trend is identified whenever the candles are colored white and the price is trading above the range filter, consistently heading upwards. Conversely, if the candles are colored blue with the price trading below the range filter and headed downwards, then that is going to be a bearish trend. But in order to take advantage of these buy and sell signals, we need to add an indicator known as the Volumetric Variable Index Dynamic Average, or the VIDIA indicator. This one by Big Beluga. Double click on it, and then you want to change the VIDIA length to 34. After that, click OK. Also, you want to double click on the range filter, and then on the Style tab, you want to disable the range filter, the high target, the low target, the bar color, as well as the high target range, the lower target range, and then click OK. So we're only going to be left with the buy and sell labels. The VIDIA indicator is a trend indicator, one of the best I've ever discovered, and I actually created a video to talk about what exactly this indicator is. But a simple explanation is this: it identifies bullish and bearish trends in the market. market. But what makes this indicator even better is that it gives you the volume data at each point within a trend, helping you to know when to trade and when not to trade. So this indicator not only identifies the trend direction, but also the strength of the trend. Now, here's how to take a long position with this strategy. Condition number 1, you want to have a buy signal printed by the range filter indicator. Once you have it, you want to ensure that the trend of the market is bullish, which means you need this trend ribbon to be colored green like it is right here. Then lastly, to ensure the trend is strong enough and increase the chances of the price going up, we need to take a look down here. The delta volume is supposed to be at least 20%. The delta volume is actually the difference between the volume for all the bullish candles and the volume for all the bearish candles within this specific trend. So it basically takes the buy volume value minus the sell volume value and expresses it as a percentage. Having a minimum of 20% increases the probability of the price going up. Right here we can see it's well above the 20% limit, so we take a long position. The stop loss is gonna go under the most recent swing low, targeting 1.5 times the risk, letting the trade run, and it was profitable. Now, to show you the power of this strategy, you can see that we had another long position just a few candles later. We had a buy signal, the trend of the market was bullish, and then the delta volume was above 20%. If we were to take this trade, you can see it would have been profitable. Now, to take a short position, it's basically going to be the opposite. So you want to have a sell signal printed within a bearish trend. The trend is going to be identified as bearish whenever the trend ribbon of the VIDIA indicator is red. And then to confirm the trend is strong enough to push the price down, we need the delta volume to be at least minus 20%. And this number should be increasing towards the negative side. Here we can see it's at minus 34, which is larger towards the negative side when compared to our minimum of minus 20%. We take a short position. The stop loss is going to go above the most recent swing high. The take profit is going to be set at 1.5 times the risk. Looking at this, the trade was profitable. In summary, the range filter strategy combines buy and sell signals with the VIDIA trend, as well as the delta volume analysis to filter out false signals, ensuring trades align with strong bullish and bearish trends in the market. If you want to check out this indicator, well, you can find it on TradingView. That's been it for this video. I really hope you found some value. If you did, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.